We are joined from Dubai by Arun Leslie John, Chief Market Analyst at Century Financial. Arun, thank you so much for joining me this morning.
Good morning.
Blackwell, the largest asset manager, managing $322 billion of assets AUM, and it can raise $1 billion for alternative investment by rich people in private equity, which takes longer to bring back any returns for investors in them. In your view, what is the reason for this optimism in this kind of assets and investments now?
Regarding BlackRock's specific proposal, as we can see, the funds are targeted at the European investor. For many reasons, Europe has seen a lower PE activity when compared to United States. This is surprising, primarily because Europe and US are direct markets. Europe has a similar GDP when compared to United States. However, European investors, especially the HNI clients, they seem to have a lower risk, or they have not adopted the private equity method of investing much when compared to United States. There are multiple reasons, obviously, for this. The regulatory structure inside Europe has not been that favorable when compared to United States. Like whether it's a bankruptcy laws, whether it's a labor laws, whether it's a capital gains, or whether it's a way the return from the private equity investments are treated, they have been much favorable. However, there seems to be some optimism for the private equity industry right now inside Europe. Like there are investors inside Europe seem to be more willing to embrace, primarily because private equity investments tend to have lower correlation with the traditional asset classes. So that provides more diversification for the HNI clients inside Europe, and they tend to have lower volatility than public markets, and more attractive returns also. So obviously, there's a case for optimism for the private equity industry, especially inside Europe.
Those private investments carry more risk than in investing in publicly listed companies. So, how the type of investors and the way they can invest in such investments, private equities, is it appropriate for everybody?
Obviously, it is not appropriate for everybody. Private equity investments, some of the disadvantages of private equity investments are lack of liquidity. They tend to be locked up in long-term funds, and a person cannot easily enter and exit private equity investments. In a public space, for example, whether it's in bonds, whether it is in equities, they can invest and also exit at a much faster pace. So the advantages are there, but the advantage of private equity space is that they offer a diversification. Sometimes there are cases where private equity investments can be done in niche spaces, for example, dental or cloud computing or software as a service. So private equity investments offer give that opportunity to participate in niche sectors, especially, for example, emerging market space. There may not be much opportunities in the public equities to participate in those kind of activities. If I give you a specific example, India, for example, offers a lot of opportunities in infrastructure. The amount of investment required in the infrastructure space inside India is estimated to be trillions of dollars. US and Europe has abundant liquidity available, abundant surplus capital available. Now, infrastructure needs capital for a long period of time. The exit will be happening after maybe 7 8 years, like for the projects to be executed, then the returns to be delivered. So private equity investors can participate, especially those in Europe and US. They have funds available that that can participate in those kind of long gestation projects which deliver higher returns. So private equity does offer its advantages when compared to public spaces, public equities. But again, it's not only long gestation projects. Private equity can also participate, take stake in even publicly traded firms. There are abundant opportunities available in that space also. Again, specifically coming back to United States, as we know, many of the innovation companies, many of the growth stocks inside United States in sectors like genomics or 3D printing, they fell by about 65-70% from their highs 1.5-2 years back. So many of them are trading at attractive multiples, attractive valuations. Private equity players can even invest in those kind of companies. That they can buy out those companies. They can take a big stake in those companies at attractive valuations right now. So the opportunities for private equity investors right now is huge right now.
Arun Leslie John, thank you so much for having joined us today.